I've finally had enough. After years of reading comments on the internet and having trolls chirp at me, traders add no value to society, traders don't serve a public good, traders just enrich themselves and don't help others. Well, it's time to settle this nonsense. Traders do add value. In fact, we are essential to the modern economy, essential to the modern world functioning as we know it, and I'm going to prove it to you. I'm Lance Breitstein, 8-figure per year trader with over $100 million in verified profits, Wired Magazine's day trading expert, and mentor to the world's top traders. And now, public advocate for the day trading community. First off, we live in a capitalistic world, and capitalism isn't perfect, but it's pretty damn effective. America is one of the most powerful economies ever created, and capitalism is the engine that powers it.
Greed is right. Greed works.
Capitalism rewards us when we add value and further progress society, while also failing to reward us when we don't. Have a crappy business idea that fails? Odds are you did not make a dime.
The product is crap.
Have a business idea that results in broad electric vehicle adoption and sells hundreds of thousands of vehicles? Congrats! You're rich like Elon Musk. If there is a market for something, you get compensated for what you offer in exchange. The accountant gets paid for their accounting expertise, the venture capital fund gets paid for their ability to accurately bet on what will be the next big company. So why is it that we assume this incredible, beautiful mechanism called capitalism all of a sudden is 100% dead wrong when it compensates traders, some of the absolute highest paid professionals in the world? Citadel, Jane Street Capital, Renaissance, Warren Buffett, Druckenmiller, and yes, even the more traditional day trader. Ultimately, we all are performing similar functions, admittedly over different time frames and through different styles, but anytime capitalism broadly compensates an industry or a profession, you should really take pause and reflect before you assume it's wrong. Capitalism does not tend to mess around. So, okay. But what is that value we add? The number one value traders provide: price discovery. At its essence, markets reward traders for correctly betting on the correct value of a security. Essentially, they are compensated for casting their vote weighed by the dollar amount of the bet in a way that is proven right over time. That is important because capital markets allow capital to flow to its most productive uses. When companies, governments, and individuals can access efficient debt and equity markets, it allows productive businesses to grow. Apple, Nike, hospitals, schools, municipalities, and governments all need efficient capital markets to function. Traders help decide what the best risk-adjusted bet is for society and in turn get compensated for that. Warren Buffett bought companies that increased massively in value. He cast his vote by buying stock. That vote of confidence and functioning equity market allows those companies to further raise equity and debt in the future. Think about during COVID when the world was shutting down. We needed traders and capital allocators to provide capital to those who would survive and avoid those who wouldn't. The fact that the debt and equity markets kept functioning allowed hospitals, schools, small businesses, and more to function and survive COVID. Main Street needs Wall Street. Even take biotech companies, for example. You need speculators to help decide which companies show promise and which don't. That translates to future cures, discoveries, and medical devices coming into existence that save real lives. GLP-1 inhibitors have saved many lives and improved the quality of life for millions. They were able to scale so easily because those companies had funding that came from their debt and their equity being priced efficiently. That does not exist without traders. So yeah, you might not be directly curing cancer unless you're trading biotech, in which case, well, you kinda are. Traders also push markets to disincentivize bad outcomes. Want proof? Look at what happened during the recent Trump tariff war. Markets plummeted and our sovereign debt was getting hammered. Those signals led Trump to course correct after others like Jamie Dimon spoke out against the policy, and that led to a more sustainable political path forward. The market reaction, reflecting real fears of slower growth, inflation, and supply chain disruption, is part of what forced the White House to soften or delay key tariffs. The market became a real-time feedback mechanism for economic policy. That market reaction was thanks to traders of all kinds. Without traders reacting to the real economic consequences of those policies, there is no course correction. There's just ideology running unchecked. Now I know what your rebuttal is going to be. Yes, Warren Buffett and huge investors add value, but day traders don't. Day traders are just making meaningless bets. Well, this is where you're wrong. Yes, the world will go on without any one day trader. I agree. But in the aggregate, day traders are an important class, and the scientific literature even backs this up. Eric Chang, Joseph Ching, and Yingwei Yu published a 2007 piece of research, Short Sales Constraints and Price Discovery, Evidence from the Hong Kong Market in the Journal of Finance. The key insight was that even in international markets, short-term traders enhance price discovery. The presence of intraday short selling also leads to faster correction of mispricing. And I quote, "Short-term traders help reveal negative information more efficiently, improving market integrity." In a 2013 piece of research in the Oxford University Press titled Market Liquidity, Theory, Evidence, and Policy, it was found that day traders contribute to market resilience and liquidity, particularly when market makers reduce participation. This buffers volatility and improves price accuracy. And I quote, "Active traders help intermediate trades and improve efficiency, especially during stress periods when designated liquidity providers retreat." In essence, here's the fallacy many make. Any aggregate is made up of individuals. You can't take away the individuals without affecting the whole. Take this analogy. Imagine saying that janitors add no value to society. Sure, the world probably will go on without any single janitor. But what happens if we fire all the janitors because they supposedly don't provide any value? What happens when the trash is overflowing? When the bathrooms are disgusting? When the office is so messy it impedes workflow and productivity? All of a sudden, the overall machine operates less efficiently. Janitors exist because entities know that without them, the other employees won't be in a work environment that allows them to focus and do their own jobs as effectively. The whole machine starts to break down. Day traders are the same way. Yes, we aren't the huge money, but we are the fast response team to markets, able to nimbly correct small mispricings and capture opportunities that the larger players don't bother with. We are correcting micro inefficiencies. Sure, we don't make billions of dollars like the huge firms, but that is because we aren't impacting markets in the same way as Buffett does. But if you remove the day traders, all of a sudden price discovery is hurt and markets get less efficient. Another huge value add to the market is that traders add liquidity, particularly during times of panic. Liquidity means buyers and sellers can transact quickly and efficiently without moving the price too much. You want to sell your stock at a fair price instantly? That's only possible because there's a trader willing to take the other side of that risk. Without liquidity, everything breaks. Some of my best trading days were providing liquidity during market panics. Remember in August 2024, when I had the best trade of my career and saved the Japanese equity markets? I allowed people to panic and sell at a better price than they would have received otherwise. Again, the literature supports that for day traders. In a 2008 piece titled Liquidity and Market Efficiency in the Journal of Financial Economics, it was argued that liquidity, much of which comes from active traders, is directly tied to market efficiency. More liquid stocks incorporate news faster and revert to fundamental values more quickly. And I quote, "Liquidity is a crucial determinant of efficiency, and liquidity provided by active traders reduces pricing errors." So why does liquidity matter to society? Because functioning, efficient capital markets allow the masses to get better prices. Think of the pension funds, the retirement plans, and the equity holders around the world. Think of the retirees that own CDs and bonds and equities. If a parent wants to sell their stock to make sure they can send their kid to college, they need a liquid market. Again, any individual trader makes up the aggregate. We need traders to provide liquidity and do so at efficient prices so that CEOs, retirees, business owners, and many Americans can access liquidity in their accounts. The world needs functioning and highly efficient capital markets. The Fed and market regulators exist to help ensure that, because society needs them to function. That is also why society needs day traders. Does this all still sound too intangible? Let's bring it back to the original market, commodities markets. Here's something most people miss. Traders don't just respond to supply and demand, we influence it. Let's take oil. Right now, with conflict spreading in the Middle East, oil prices have been rising on fears of potential supply disruptions. What do higher prices do? They signal upstream producers to pump more. That's how global markets rebalance, through price incentives. You need speculators to respond quickly to geopolitics in order to speedily get the production response the global economy needs. The International Energy Agency, the IEA, and economists like Killian and Murphy have shown that futures prices have predictive power over real-world production decisions. So yes, When traders bid up crude during geopolitical risk, that is not manipulation. That is price discovery sending a real-world message to drillers, refiners, and governments. Get ready, we may need more oil. It's a self-correcting mechanism, not a speculative loop. Agriculture markets and futures markets allow companies to hedge risk. If prices weren't efficient thanks to day traders, we wouldn't have consistent, reliable natural gas or electricity or oil. The only reason why these producers can produce so much is because they have hedges that allow them to guarantee some level of production. The same goes for agriculture and livestock products. Have you ever gone to the supermarket and not found any food? Those markets function in part because of the capital markets and the ability to offload risk. Same goes for aluminum producers, steel producers, airlines being able to hedge fuel prices, and more. Traders are the shock absorbers and capital allocators of society. Day traders also tend to be the group of market participants most readily willing to short. People love to say shorting is unpatriotic or destructive, but research and history says otherwise. Short sellers help correct mispricings faster. They expose fraud, they add liquidity, and counterbalance market euphoria. They stop bubbles from going unchecked. In one 2008 study, Boehmer, Jones, and Zhang found that stocks with more short interest have significantly more efficient prices, meaning faster incorporation of information and less overvaluation. In a 2002 study, Chen, Hong, and Stein, no relation, showed that restrictions on short selling actually make bubbles worse by removing the counterbalance to bullish overpricing. So when shorts take down a fraud, like Enron or Wirecard, they are not villains. They're market watchdogs doing what regulators often fail to do. Day traders are often the ones shorting manipulative pump and dumps. They're the ones shorting the silly, low-float, dilutive turns. Day traders are shorting hype and fraud so that our markets operate efficiently.
Sell it all.
So let's be clear. Every time you buy or short a stock, you're participating in a complex, interconnected system that transfers risk, votes on fair value, and allocates capital more efficiently than any mechanism ever in history. So what value has my trading added to society? My trading has cushioned market panics. My trading has dampened euphoria. My trading has helped price the latest news headlines into markets so that the rest of the world can receive the most accurate prices. My trading has prevented fraudulent companies from raising more capital. My trading has helped the pension funds, retirees, and average Americans be able to reliably buy and sell securities. In the aggregate, we allow others to financially participate in the growth and success of the United States through the equity market. We don't do it alone. We do it as part of a holistic system along with hedge funds, value investors, quant funds, and more. But the same way you shouldn't downplay the role of any person at a company, you need the assistants, the secretaries, the janitors, the tech staff. Markets in the same way need day traders. Take away any one of us and markets will function. Take away day traders as a class and markets will be hobbled. Take away all forms of trading and capital markets will crumble, and so will modern society as we know it. We, in our own way, help capital reach the people and companies and governments most deserving of it. Without us, prices distort, capital misallocates, policy goes unchecked, and markets fail. We might not be a teacher or a doctor or a fireman, but in our own way, we are part of the bigger cog that makes this beautiful world function. So if you're a trader, own it. Well, on this subject, if you found this video valuable, hit like, subscribe, and comment below. That provides me the market signal to know my content is valuable to you so that I keep on producing it.